Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. On today's show, we are talking about how somebody appears to have thrown away a decent chunk of change in VGK at the close. We'll talk about what caused that. We also have earnings from Kroger and Burlington and SSYS and another rumor denied, this time in Samsung and NXPI. Today's guest will be joined at 8:15 by Mark Chaikin, the founder of Chaikin Analytics. Joe, what is the word here in the overnight session?
The word is that I need to apologize to you guys.
For what?
I forgot to talk about rollover in the futures contract. It just kind of snuck up on me, and we have March is a quad wedge expiration, right? The third Friday. This is going to be our second Friday coming up, and the Wednesday before the expiration of the futures contracts in the S&P, they do the rollover. And what the rollover is the people that have the March contracts expiring need to transfer their position to the June contract, right? So if you're long March, you got to sell March and buy June and vice versa. And we've talked about expirations here several times. And how are we doing? Do we got sound here?
Yes, we do. Just okay. Dennis. Just Dennis.
Just that.
But we do.
Okay. So the expiration, the rollover took place yesterday, and it just kind of sets up a scenario where some of the liquidity is spent between the two contracts. So right now, if you're looking at ES, it's actually giving you the June contract. I'm going to stick with the March contract. I haven't rolled over my numbers to that. I will do that over the weekend. So this on your platform, if you're seeing a difference between at ES, ESH, and ESM, that is the reason. So I'm going to give the numbers based on the March contract. We took out the low from yesterday, which was 68.5. Went down to 61.50, but we are rebounding from that level. So we will keep an eye at that's a target on the downside. 61.50, we just started a slow rally a little bit ago, back up near the highs of the session. Things are kind of thin for resistance, folks. If we get over 77.50, I expect us to maybe try and roll back into that 90 handle. Not really seeing much in the 27.80 handle. Crude up 66 cents here at 56.88. Just still kind of in the middle of that, really exactly in the middle of the range. Gold trying to muster a rally, double bottom lean up 60 cents at 12.8820. Silver up a couple pennies at $15.10.5. Triple D, how you doing this morning?
Trying to get my thing off mute. I tell you, this new Skype, Microsoft, if you're listening, flaws in the new Skype. So download the new Skype, and if I answer the pop-up, so if I get an incoming call and I answer the new pop-up, my video camera doesn't work. But if I answer it on the main window of Skype, it works. So we figured out why my video wasn't working the one day and why it wasn't. Your pop-up is flawed. Second thing, Microsoft, is I hit the unmute button, but it doesn't like only one hit. It wants 2 hits. So I have to hit it again twice to unmute it. So Microsoft, fix your stuff. Skype not working correctly. Anyways, that's my rant against Microsoft. Once again, I know they make a lot of flaws and stuff, and I rant about them a lot, but it's true. Microsoft, fix your stuff. Anyways, market structure, fix your stuff here too, because VGK at the close, and I think they might have busted this trade here now, but if you bring it up and look at VGK and say, you look at your chart and you say, whoa, and show the chart, Joel, 49.46, what the hell is that at the close? Well, some institution sent their closing order, their market on close order to NASDAQ. The problem is VGK is an ARCA listed stock. So when you send your close to the your market on close order to the non-primary exchange, you get ugly prints at the close, and NASDAQ will accept that order. And if you look at it, you can see that big bar going straight down. Is it still there, Joel, or did they bust it? Can you see it there?
I have it. Spencer, you still
Can you show the actual trade?
I have it.
Can you scroll over and show the actual trade? It's 39,500 shares of 49.46. So anyways, VGK, that's 2 months of gains it gave back on the closing print if you did on the wrong exchange. Don't worry, it's not going down there, folks. It was just a bad cross. It was a cross that was obviously too low on NASDAQ. And that's because whoever sent that order, probably an institution because it's such a large size order, sent it on the wrong exchange. You got to send them to the primary exchange because the liquidity is not there when you send it to the non-primary to cross. So anyways, this is the problems with fragmentation. It can cause user error. User error happens, and you see stuff like this happen too. I mean, if you didn't have fragmentation, if you have like a CME market where everything is just there, stuff like this would never happen. But because we have 12 exchanges, 40 dark pools, and all that stuff all over the place, sometimes you get outside prints that happen. And when you send a huge order to a non-primary market as a market on close, ugly things will happen. And this institution threw away $170,000 if they don't bust the trade. It's not showing up on my chart, so I think they may have busted this trade after 8 o'clock last night. And if anybody has confirmation, if they're following the story, I didn't go check. And I don't know where you check that, actually, if they bust the trade or not. Sometimes it shows up in the consolidated tape. I did not see it as of like 7 o'clock last night, but I never really looked after that. It'll show up like with a 0, and then they'll show the correct print. I didn't see that last night. But VGK 49.46, don't worry, it's not 49.46. It is still trading up to 53.63, but somebody put the order on the wrong exchange and accidentally threw away $170,000.
Were you out there? Were you making a market in this stock?
I mean, it's in it on ARCA, on the primary market. I never thought about making markets on the non-primary. This is a rare occurrence because for the most part, people, and especially institutions that are trading that kind of money, know where to send their MOC orders. So this is like, a fat finger, like maybe, and Mechanical Markets, who is a good follow on Twitter, was saying maybe they just checked the wrong box, and coincidentally, it's funny. I did this myself yesterday. I haven't done this in probably years, but I sent some of my a couple NSDQ orders, NASDAQ orders on NYSE stocks because I just got an upgrade in the Ready software and everything got moved around and discombobulated. And I actually did the same thing, although I did on small size, so it didn't cost me $170,000. But you send the order to the wrong exchange and on a market on close, and you're going to get an ugly print. So because the liquidity is not there, all the way the close works is they just take everybody who's got the MOCs, the LOCs, they match it up, and if there's orders on the books, that can offset it as well. But when it's a non-primary, there's not going to be that much on the NASDAQ book, especially at the close. So then obviously you can get these crazy prints, and the thing falls 10% on the close. So and we've seen this happen. You do see this happen, not often though. This isn't a common occurrence. So it's not like, okay, everybody should go make markets on the non-primary and you're going to get these kind of prints. This is not a common occurrence. And I would imagine if this institution if they were to call the NASDAQ and say, look, we obviously put this on the wrong exchange. Can you adjust our price or bust this? I would imagine they would do it. There's usually parameters. I'm not sure if this was in the parameters or not. I didn't do the math, but usually if it's over 10% out of the market, they will automatically bust it. If it's under 10%, then there's going to be obviously, some issues, where, can they bust it or not? They got to go to ruling maybe. It used to be in old days, it'd always go to ruling and all this stuff would bust, but they got more set parameters now. So they can try to take the subjectiveness out of it. But in any regard here, I think if the institution calls NASDAQ, they probably get their money back and they probably would bust this trade if they haven't already. The one problem is if you're like, let's say you're like $1 billion fund, you might not even notice $170,000 for a few days, and then it'll be too late. So if you are that institution that sent that last night, please call NASDAQ and have your trade busted and get your $170,000 back.
Adjust or bust. All right.
It was different back in the day, and we would always back in when things were manual, there was human error all over the place. So I can remember you remember this 1999, 2000, you get a print. And you're like, oh, that's no good. It's outside. I would just call, Ready up, and they'd send, a runner to the floor, and they'd go down and talk to the specialist on the floor. It's back when we had specialists, and they'd say, yeah, we messed that up. We'll give you an adjust, or you'd have something else, or sometimes they'd negotiate it. They're actually the counterparty they would contact and say, look, we'll split it with you. Otherwise, we're going to send it to ruling. And then the ruling on the floor stands. So it's like, okay, well, it's almost like it's it's a judicial system here. Let's try to settle outside of court. If we have to go settle in court, then we'll we're stuck with the judge's ruling. But sometimes you can settle those out, and sometimes it'd be like maybe I was a beneficiary of it, and I got printed 2 points outside the market, and they call you up and say, look, they want a bust or adjust. I'm like, okay, well, I'll offer them $1. I'll give them $1. And sometimes they would take it, sometimes they not. Sometimes they take it straight to ruling and they'd say, yeah, we're busting that because I was just outside the market. But now they've got parameters. You can go to NASDAQ and you can see those parameters. So they've taken a little bit of the subjectiveness out of it. But stuff like this is an argument against market fragmentation. I mean, maybe the market is too fragmented. And when you have one little mistake, like a little fat finger here, somebody can throw away $170,000. Is that fair? Not really. Was it on that institution that sent that order and marked it wrong? Yes. But I mean, and some people say, well, they got to know what they're doing. But, it's really not fair that this thing can print 10% down because somebody made a mistake.
Yeah, I mean, you've seen it happen on the closes. Is just be sure you're marking your orders for the right exchange.
And TT Mac making a good point says, don't these guys put limits on their orders? They should. But a lot of institutions and a lot of traders use market on close. I never use a market on close order because ugly things like this can happen. I use limit on close orders where I mark my price. I put my actual price. You can put it market LOC, limit on close, and it will still execute. So let's say you wanted to sell on the close. You could go like 53.63 and say, oh, I want to sell on the close. I'm going to just market at 53.25, limit on close. This order would not have executed down to 49.46 if the institution would have done that. So I always like limit on close orders. I never like using market orders. I rarely use a market order ever because it's a blank check and you're in this it's high frequency trading world where everything moves very, very quickly. And writing a blank check to this market is scary. So do you use market orders, Joel?
No, marketable limits.
Marketable limits are fine. And what we mean by that is you're sending an order through the market. So basically, stocks trading at 25. I'm going to put a 24.95. I'm probably going to get filled. But in the case of the market moves really rapidly in the time between I click my mouse and, it goes in, I'm not going to get, a really ugly fill. So in a fast market, it's always better to use, use a limit orders. Put a price on your orders. That's
we got Mark Chaikin coming out at 8:15, and we got to wrap this up.
VGK talking at 10% down. I find it exciting when you see stuff like this because it shows flaws in the market structure. But anyways, it's fun.
What about any flaws in market structure on NXPI on that rumor?
Yeah, so last night, and Spencer, you might have all the details on this because I didn't bring it up, but you got the trusty Benzinga Pro in front of you there. Last night, after the bell, comes out rumors that Samsung is going to make a bid for NXPI. Talk to me about this.
Yeah, the number was reportedly around $44 billion is what they
who reported this?
I'm not sure how to pronounce it. Yonhap. They're an Asian publication, and they reported the $44 billion price tag and Samsung offering for NXPI. Samsung said, no, we're not.
So this came out last night, I think around like 6:50. And it popped up over $100. I decide had never heard of this Asian paper that was reporting this, and I was like, you know what? Even if they do make a bid for it, I'm like, what's the price gonna be? Like 110? I kind of like the risk reward, so I shorted at $100. Starts going 101, 102, and then I'm on Twitter. And maybe we're just going to have to, it's going to take me a minute to tell a story, but we can bring Mark on the fly. But then, I'm looking around and trying to get a feel, I've got, I'm looking at the news and I can see the article, but there's no price in there. But then somebody starts floating around that price that you're talking about. And that's like equivalent to $130. So there's rumors flying around that this deal could go off at 130. I'm like, oh man, if it's going to be that high, my risk reward is completely out to lunch here. So anyways, it's trading like 100 and change. So I'm looking at it like, okay, I don't like the risk reward here now because I have 8 points upside if the rumor doesn't come true or less than that because you can see it wasn't true and it's not all the way back down. And if it does come true, it could be up by like 120. So I was like, okay, I'm just going to cover. So I end up losing 50 cents on the trade. Like I'm covering like $100.50 or something. And then it comes out at like 8:30 last night that, oh yeah, that's not true. And the stock's back down. So Moral of the story is don't get nervous and read Twitter and people throwing $130 numbers, because sometimes people just make stuff up. You gotta be careful what you read on Twitter.
And you were just saying yesterday on the show, you know, how many of these rumors, these M&A rumors, really come true?
A lot of them are not. There's just so many people. The media is so hungry for a good story. It seems like they're jumping the gun and they're like publishing stuff on like nothing. Even that WLTW, you know, Faber's awesome. And David Faber says something on CNBC. Take it, you know, like, because he is often right.
That was different.
So he's connected. But you know, he even got the background to the WLTWAON story, saying, yeah, they had some initial conversation, but it was never really, you know, it's like stuff leaks so easily now, and then it gets out there, and the media is hungry for a story, and they publish it right away. And sometimes these things, you know, yeah, just because somebody sat down and talked doesn't mean that there's an imminent deal here happening. So, I mean, when these things are popping 10, 15% on just rumors, a lot of times it's a good idea to ring the register. And NXPI could have rang the register up at 102 last night. I shorted it. I got spooked out. I shouldn't have got spooked out because I've been making 6 points here this morning, or 7 points here now. But that's the story here, and I'm sticking to it. On these rumors, I'm a sell the rumor guy.
All right. Well, let's find out where Mark Chaikin stands. He's on with us now. Mark Chaikin, the founder of Chaikin Analytics. How's it going today, Mark?
So, well, I am standing in Philadelphia looking at the Comcast Center, but
very nice, very nice. Dennis is ranting this morning about selling. Oh, he's ranting about many things, but among the things, selling M&A rumors.
Whatever that.
Selling M&A rumors.
Did you hear it? Like
Joe Kernan is back and he's ranting as well, so you're in good company.
Okay. Well, I hope you're not comparing me to Joe Kernan.
No. It's just
Joe Kernan's a good guy too. But
yeah.
Did you follow this NXPI story from last night? Samsung coming out, some Asian paper reporting that Samsung's going to buy them, and immediately Samsung, like an hour later, denies it. I was just saying, there seems to be so many rumors out there now. It used to be like rumors come out like if they come from Bloomberg, Reuters, I mean, they may be more substantial. But even CNBC's been breaking some rumors lately, and they don't come to fruition. I mean, it seems like there's just everybody's hungry for a story, and a lot of these rumors don't materialize into anything.
Well, that's why I like to look at the power gauge. So the power gauge turned bullish in mid-January on NXPI at about 78. And so you've attracted a lot of good institutional buying. It's been outperforming the market. And now you're oversold a bit with this drop yesterday. So, I agree with you. Rumors in this kind of market, you don't need rumors. You had Boeing that went up 52% from the December lows. You didn't need a rumor to make money.
Right. So my argument was just that sometimes these things, when they're popping 10% on a rumor, sometimes it's a good idea to maybe lighten up or ring the register if you happen to be lucky enough to be long it, because sometimes these things don't materialize in anything. And last night could have sold NXPI at 102, and this morning it's 93 because there obviously wasn't much to this rumor.
It's always a good idea to sell the rumor. How many of these pan out, and then when they do pan out, there's some sort of delay. It's it's a gift. For me, it's a gift.
Mark, how you doing? I just want to hop in here. Mark Chaikin of Chaikin Analytics. He joins the show every couple of weeks. So we had you on a couple of weeks ago, and you had some very strong, bullish, powerful readings. And we've just kind of meandered since then. So my first question is are you still maintaining that bullish stance from 2 weeks ago? I mean, we really haven't moved much, but what are the power gauge ratings say about the last decline here?
Yeah, I would actually take exception. I think you had a lot of the strong stocks and strong industry groups like software and semiconductors that really did very well and made new highs as recently as Monday. In my weekly market letter on Sunday, for the first time, I said, although I'd continue to buy dips of 2 to 4%, I think you should take some money off the table. So the resistance at 2,800, 2,820 on the S&P has proven to be, as you would have expected, fairly substantial after a 450-point move in the S&P 500. I still think the potential 6 to 12 months out, based on the breadth thrust that we saw in January at 2,500 and the very overbought readings of the various advanced decline indicators like the McClellan oscillator, McClellan summation, speak to lots of potential upside up to 3,000 and maybe beyond on the S&P. But we're in a period of short-term chop here. and we've had now 3 days down. The futures were down, but then with the ECB stimulus announcement, they're back in positive territory. So I think 3 or 4 days down may be all we're going to see. And then from a short-term influence, and I'll turn it back to you, you typically get a rally into the quadruple witching in March, which this year is on the 15th. So I think between now and next Friday, you'll see some sort of upward bias. I expected us to be choppy. After the triple witch, you usually see some selling. So I think we are in a period of chop now, and you want to buy only on significant weakness down to support.
Joel, you're on mute. Oh, hold on one second. We got a follow up here.
He's running the new Skype.
Sorry.
It's coming.
All right.
You got to hit it twice on the new Skype, Joel. They don't like one mute. I was having a rant. I'm in a rant mode here, Mark, this morning. I downloaded Skype. I downloaded the Skype, and it's all messed up. I can't, my video doesn't work half the time because I hit it with the pop-up. And my mute button on the new Skype, I hit it, but it doesn't like it because it wants one click to activate the window, and then it wants another click to actually mute it. So you actually almost have to hit it twice.
Right,
so, Joel, if you're on the new Skype, that's why you're having mute problems.
Joel's a follow-up.
Thank you for that Skype education demo there. Expirations, Mark, you've been around for a long time. I noticed that you said triple witch. The single stock futures are expiring.
Actually, quadruple this time.
Yeah, quadruple. Well, it is every time with the single stock futures. But have you noticed, over the years, these expirations marking turning points in the market? Just for example, your December expiration, you had a lot of chaos after the December contract went off the board. You bottomed in the market and had a nice rally. This time, will it be a continuation pattern or turnaround? What's been your observations over the years regarding these triple and quad witches?
Well, you typically get upside bias into the expiration and then selling in a bit of an unwind afterward. This year, because we've had this huge rally, I think you're more vulnerable to a 2 to 4% pullback after the expiration. But there are buyers out there. There's a big bid. The expiration is a short-term influence. I don't think it has much of an effect on trends.
All right, let's get some picks here, Mark. Long side and short side. Give us some names on your radar.
Long side, I want to buy Intel on weakness. I want to buy Salesforce.com on weakness. I want to buy some of the small cap software stocks like Cadence that we like and Synopsys. And in terms of selling, obviously Tesla, our favorite whipping boy. But Qualcomm, I think you want to sell. There's been a lot of hype about 5G, but the stock still has a bearish power gauge rating. We still have a bearish power gauge rating on Apple. That's not changing. The only FANG stocks that have bullish rating actually is Facebook. And in terms of chart patterns, Google has a pretty decent chart pattern, and Netflix, obviously everybody's favorite, waiting for something to happen that's going to hurt the stock because all the good news is baked in, I think. But I think it's time you prune weak stocks out of your portfolio. The oil service, the drilling stocks, just awful. If you bottom fished in that pond, you've got slime all over your portfolio. So any chance you get to sell these stocks on a rally, and you did have a good rally in the energy stocks, I think you want to get out of Halliburton or Schlumberger. If there's activity, it's going to be in fracking, and somehow these offshore drilling companies and supply chain haven't adapted.
Facebook, I'm glad you mentioned Facebook. This one's interesting to me. I think yesterday was a huge endorsement for the stock. Zuckerberg released the statement where they're all about privacy now. Privacy is the new name of the game at Facebook. It's the new direction of the company. And I was really surprised that they didn't hit the stock on this note that he came out with. The biggest quote that I saw here, and I'll read from it directly, is upholding this principle may mean that our services will get blocked in some countries or that we won't be able to enter others anytime soon. That's a trade-off we're willing to make. And I was really surprised, in light of those comments, that the stock held up well yesterday.
It did, and over and above that, there was a big headline on CNBC saying advertisers leaving Facebook in droves, and the market didn't care. Normally, if you go back to let's say February last year or August through December this year, that would have knocked the stock down a good 2 to 3%. Not this time. So I agree with you. Sometimes you have to look at the market action. Now we had a oversold buy signal on the stock at about 162.50 back on February 20th. I don't want to buy it up here. You've got sort of a double top area at 170. I'd rather buy it on a pullback below 165, but it's certainly acting well, and to the extent that it's basically 20%, 30% off its high. I think you've got a real opportunity. They're still generating big money, in ads, and other than Google, that's your best, I think, social media advertising play.
Question from the chat here, and you mentioned it a little bit here, but Netflix. Can you just sort of outline why you're still continuing to be bearish?
Well, let's call me negative because the stock is in an uptrend above 340. I think it's okay. They spend too much on content, and so they're dependent on public market financing. And at some point, the window closes. I know they're generating all this buzz about new subscribers outside of the U.S. The content is expensive. It's basically a movie studio with great distribution channels. But if you look back at the history of movie studios, they're sort of like the airlines. Net, they don't make a lot of money. They make it on the film library. So the question is, where does Netflix get the money to keep expanding and showing negative cash flow quarter after quarter? It's still under its high. Remember, the high was about 420. So you're trading at 360. With the market 4% from its high, this is significantly down. You've had a nice move. Money flow is starting to come out of the stock, by the way. Money flow is negative right now, Chaikin money flow. Not big time like it was in the fall. I just don't like the model where you have to keep spending to grow and you're not generating free cash flow, positive free cash flow. I could be wrong on this one. I'm not short the stock right now. I would only think of shorting it below 340.
Yeah, I'm really undecided because I get what you're saying, and it's expensive to run the business, and they're about to lose a ton of content when Disney launches their OTT service next year. But at the same time, their reach they're basically the biggest movie studio out there, and their reach keeps on growing. I don't know where they find these new subscribers every quarter, but they do. So I don't know. I sort of see both sides of the coin here. I haven't really been able to make up my mind on Netflix for a while. Before I let you run, Mark, any final thoughts for us this week, or any final picks?
Yeah, sadly, because the Chaikin small cap ETF, CSML, again, not a recommendation, is the best performing small cap ETF over the last 3 months. I think small caps are going to start to underperform. You had a big 6-week run where they outperformed large caps, but you had a missed opportunity on Monday. It didn't go up and make a new high. You had a high volume up day that then reversed to the downside as everything did on Monday. So I think small caps are going to underperform large caps over the next 3 months. So that's a big switch because we had been liking the small caps, particularly the software and semiconductor small caps.
All right. Mark Chaikin is the founder of Chaikin Analytics, joins us every other Thursday. Mark, thanks for the time as always. Have a good rest of the week.
Okay, and keep that Dennis guy under control there, please.
I try, but I can't. He's impossible.
I can't keep myself under control. I'm one of those. I'm like a 4-year-old kid. I just can't control my id.
Good to be with you guys.
All right.
See you, Mark.
See you, Mark.
TT Mac commented, Triple D is back in groove after the vacation.
Wound up again.
Do you rant?
Maybe it's a lack of sleep. Because my 1-year-old got up 7 times between the hours of 10:30 and 12:30 last night. Wife obviously helping out with that too, but I'm helping out as well. And Man, so I think the lack of sleep gives me energy somehow. I'm like the opposite.
Do you go on rants with Laura and the kids and stuff?
I'm just a ranter.
What do they do? What do they do? They live with you. They can't like.
No, they don't listen.
They can't like take their headset off. No,
they don't listen. They just said like not listening.
All right, let's get. We haven't, and we done one earnings yet. We did rumors. We did bad bogus trades.
Was there an earnings report?
There's been a couple, but
all right.
What's going on with why are we rallying here? I've just
Joggy. The drogster.
What did drogster say now? Okay. We're up 10 points from the lows.
It was Droggy. I got it. I forgot that he
said we will forever back up this market with quantitative easing if we need it. What did he say? I'm guessing.
I'm looking.
He said buy SPUs.
Buy SPUs. All right. Anyways, whatever he says, whenever those guys talk, it's bullish for the market, it seems like. So they're scheduled to talk. Be careful.
It's a drogster. Yeah, definitely. But so let's get on. No, we have some decent reports. Spencer, what do you want to start with after the close?
Let's start with a not decent report in Kroger, a store that I went to a few weeks ago for the first time, maybe ever, or second time. I don't know. Their quarter, not great for Kroger. KR reporting this morning, Q4 adjusted EPS of 48 cents versus a 51-cent estimate, sales of 28.1 versus 28.47 billion dollars. So a miss on both the EPS and sales in the quarter. Their guidance was fine. The fiscal year guidance was in line. They guided for a comp growth of around 2% for the fiscal year. It just wasn't a great quarter. That's it.
Nobody's going Krogering here. 25 maybe, big psychological level, but who wants to come and try to call the bottom here and the stock's down 11%? We've seen this happen before with Kroger. Obviously, you got Amazon in early 2018 and went from $28 down to $22. I don't think you're going to see a repeat of that, but you're halfway there. I'll call, 25, maybe some bouncing, but I'm not interested in this one long term.
There's a little bit trying to make a green candle here. Very, very hard. Just continue to make new lows on the session. Currently sitting at 25.35, or excuse me, 25.20 is your current low of the bracket, trading 25.27. Let me go to the dailies here, and for our gap traders here, we had, where is this gap? I'm trying to figure out here. Back from June of last year. I don't know if that was an earnings report, but you're filling that gap at 26.39. Man, I can't see much in here. You can use 25 as a whole number. Let me see if I can find anything significant here. 24.85 was your June 8th low, so you can use that as another target on the downside. But right now, not as we speak, not really showing any chance of a rally.
Jump over. The other big report there we got was Burlington Stores, and it is getting whacked. It rallied there a couple days ago on some of the other retailer sympathy here, and not the case this morning. Burlington Coat Factory, I still call it BURL. How'd they do? Obviously not well.
A mixed quarter, but their guidance, I think, was a little bit light. So the Q4 EPS, $2.83, was a 6-cent beat. The sales missed by a hair, 1.99 versus $2.04 billion. The fiscal year EPS was a little bit light. They guided $6.93 to $7.06, which the high end of that estimate was the consensus estimate there. So a little bit light on the fiscal year EPS. The Q1 EPS guidance was a smidge light, also around $1.20 to $1.30. So not great guidance.
Gets down to the 145, 150 area. You've had support there back in November, back in December. I think under 150, you got all kinds of buyers down there. So I think you're coming here shorting it now. I think you're late to the party, but you got a little room to the downside. 156 kind of tricky. It's one of those that you're kind of in the middle of nowhere. So I like it under 150. 156 is just too early for me.
Yeah, I think we're stepping up here ahead of your January low. Your yearly low comes in at 154.78. Your current low is 156.25. Just kind of pausing here in the downward momentum, but first time down to 155. We'll see if we can get a bounce there. Unfortunately, your December low was quite a ways below that 147.74. So your major long-term support does come in at the 145 to 148 area. But let's see what we do with the January low.
Let's stick with the retail and go
Sure.
to American Eagle Outfitters from yesterday afternoon. They reported Q4 EPS 43 cents, beat by a penny. Congratulations. Sales 1.24 versus $1.26 billion. So an overall pretty neutral quarter there. Slight beat on the EPS, slight miss on the sales. The Q1 EPS guidance they gave was light. 19 cents to 21 cents is the range they guided. 24 cents was the estimate there, and that's your story in American Eagle.
Probably got the lift yesterday ahead of the numbers because Abercrombie and Fitch blasted off into orbit at one time over up 20% there. It can drag up some of those other smaller clothing retailers as well. And AEO, I think, was obviously the beneficiary of that. And now not nearly as good a report as ANF, so it's giving it back. That being said, all kinds of support in the 19 handle if you get down to there. Where do we get here after hours?
This is an interesting one. Your initial spike took it down to 1980, but you've just kind of meandered and held out here. I will say there's just a ton of support at that area. There is 1, 2, 3, 4, 5, 6, 7 consecutive lows. Let's just call it 1970. So I will be interested if it comes down to that support. Jeremy and I did a little strangle on this one, but I made a note to self next time I buy a strangle to sell a straddle because this is not really moving that much. But, the other reports that come out, and these retailers have moved pretty good. This one had the head start yesterday. The buyers from yesterday are disappointed. We'll see what happens under $20 in this one.
Costco going to report tonight. MRVL, Gunmaker, AOBC, which I still call Smith & Wesson, but it's called American Outdoor Brands. OKTA going to report. So you're going to get some reports here tonight, some interesting ones. But let's move away from the reports here for a second. I'll give you a quick imbalance look first, and then we got some JPMorgan ratings. JPMorgan was very busy here overnight.
Busy day.
Yeah, so we'll get to that. General Electric, terrible day for the stock yesterday. It's still down here this morning. 330,000 shares to sell. GE, so a little bit of follow through. I still think it's going under $9. It got to 905 yesterday, didn't quite get there. I think you're going to hit the stops under 9. Maybe can rally. If you get down to 880, 890 area. But they were talking it up pretty good on CNBC last night. All the fast money traders seem to like GE. I'm still going to hate GE, so I'll take the other side of their trade. I'm a seller of all rallies here in GE. I liked it for a while. I liked it in January. I liked it in February. But when I came back from my vacation after I saw that blow off top, that's why I think the top is still in here, and I think the path of least resistance, I'm sticking with the JPMorgan analyst and our buddy over at Gordon Haskett there, inch. I think GE is eventually down in the 8 and potentially 7 handle once again. So bearish GE overall.
Who else besides GE for imbalances?
Bank of America, 86,000 to sell. That's fairly small for Bank of America, though. Can chew that up. Oh, you know what? They're really small. BABA, the Bob story I always like to look at because it gives you, I'm bringing it up right now, 92,000 to sell in BABA. That's significant. It is down at $1.77 here in the pre-market, so that is influencing it as well. You know what? They're all pretty small, though. I don't see much. Jump over. So let's go to the ratings parade here, Spencer. JPMorgan, really busy here. What are they doing?
JPMorgan, the home builders. A few things. The home builders, they are active in that space. They are downgrading both Toll Brothers and MTH this morning to underweight. So I guess I'll just start there, and then we'll move on to their other note this morning. So let's look at TOL.
Joel, TOL is trading up slightly here in the pre-market. Is TOL downgraded?
That's what I see. Wait, am I on the wrong day? No,
I see TOL downgraded here too, and it was trading down here earlier. Did we get some numbers or something? It just started going positive here. TOL is actually in the green, so it's rare to see a stock that's upgraded here. I got to go just to check out, see if there's other news, or did we get any numbers at 8:30?
We had jobless claims. That wouldn't impact the home builders, though. So who else did we? What else?
Toll Brothers downgraded underweight. JPMorgan price target is $32. Stock is trading higher. Okay. Okay, well, I don't know. Anyways, $35 to bid here right now. So normally you'd think this thing, especially as underweight as a sell, you'd think this thing's going to be in the lower 34s. Not the case. It was 34.56 10 minutes ago, so it just decided to get a lift. So I'm not sure if something else is going on there or not.
I think Joel's on mute.
This Skype, man.
It's okay.
It's that Skype.
It's okay.
It's
relax,
brutal.
Relax. Joel, go.
Sorry. You know what? I got a cold. I'm really congested, so I didn't want you. I'm sure you guys don't want to hear me sniffling during the show, so I've been going on mute. Sorry about that. There's good support here under $35. Currently trading at $35.01. It's only up 19 cents here. 3 out of the last 4 lows. This called $34.70. So I'm not looking for any downside action here, unless it could take out $34.70 in Toll Brothers TOL.
JPMorgan, I mentioned, also downgrading MTH to underweight this morning, Meritage Homes. And they are upgrading, I guess you can call them consumer stocks. They're upgrading Abercrombie and Fitch on the heels of that earnings report to neutral. And JPMorgan is upgrading Estee Lauder, EL, to overweight.
Okay, EL is going to have a big move off this because we haven't heard any analyst commentary from EL for a while. And here's a lesson for you on analysts. You get the analysts, upgrading or downgrading the big caps. They aren't as influential sometimes as some of the mid caps because you don't hear from that much. We haven't had an Estee Lauder rating change in a while. And I don't know, you could probably look at the pro and you can find out exactly when the last one was, but I'm just going from my memory and I can't remember the last Estee Lauder one.
We haven't had an upgrade since January 2nd.
Yeah, so it's
we've had some
a couple months.
We've had some downgrades.
So that's why, and they're influential because there's not as many analyst coverage, so they can move. So Estee Lauder is now bid at 156.21, up $2.33, and it's bid there. We had an odd lot that just traded at 157.77. Probably is going to trade up into the 157 handle here on this. So I'd look at those highs in the move, 159.37. Probably some overhead supply of that 160. I see all those pesky highs there. Makes me want to go automatically look at the book and see what's at 160 because there's probably something in the way here. Yeah, well, 10,000 shares at 160, so it's not that big, but that's something for Estee Lauder. Joel, what's up with this one?
Well, it's up 389. I mean, holy
on the odd lot, yeah.
Yeah. Oh, was it? Oh, yeah, 235 shares. So I'll just look at this recent high. Dennis, you nailed it there, 159.37. I'll take a look and see what happens there, if in fact it can get up to it. Big gap and going this one in February off earnings. So really, and I believe that's the all-time high too, 159. We hit 159.21 in March. And your February high was 159.37. So that's really the only thing I can give you on Estee Lauder.
Very interesting call here from Goldman Sachs this morning on NEO. They are reinstating it as a buy. So they like the downward move.
They're buying the dip.
They're buying the dip.
And the market is not, because it doesn't even care that Goldman reinstated a buy. It's down another 16 cents here this morning. But keep that in mind. You've had now a huge move down. A lot of times you see these things turn like between 9:45 and 10 o'clock on the second day. So this thing washes out to, let's say, 740 or 750. Get anywhere now near into that 726. You could have an opportunity where this could be a buy the dip opportunity. And I don't know if I'm jumping here at 785. There's still a lot of sellers out here, but I like those turns sometimes. So I'll be looking for a turn on this in NIO somewhere 15, 20 minutes after the open.
Okay,
and we get a washout open.
Yeah, it got hit yesterday. It just kind of trickled down, nothing major. Major support for me comes in the lower 7 handle. Boy, a bunch of lows between, this is called 730 your major support. That's 35 cents away. Dennis, I just want to mention LK here. Notice that, when you had that VGK print,
yeah.
You also had a crazy print in EWA. Did you see that?
No.
Yep.
What was the EWA print?
Oh, wow.
Wow. It went up to 23.52.
Wow, good eye.
Yeah, very good.
Yeah, probably same. And so EWA, again, I believe, yes, is ARCA listed. So NASDAQ print would be out to lunch at 23.50. So somebody obviously put a 38,000 share buy order. So maybe they're doing a pair trade between Australia
and
VGK is Europe, and they put it on the wrong exchange. Wow. So great eye. I did not see this one. I don't know if I really look at EWA very often. It's a thinner one. I do trade VGK, but I don't do anything in EWA usually. So I'll have to put that in my list and then I would have noticed it. But great eye. Yeah, it would trade up on 38,000 shares to 23.52, which is 2 points outside the market. So another $80,000 thrown away there. So this is, I'd imagine it's the same institution with a fat finger. And and this is starting to make sense. Looks like they were doing a pair trade at the close, and they put it on the wrong exchange. Buy EWA up 2 points too high, sell VGK down 4 points too low. I don't know if they're going to come and bust these trades or not, but you threw away 80 grand on the EWA side and 170 grand on the VGK side. Look, where moral story is send your closing orders on the primary exchange.
They're going to have a hard time unless they're working out of that spread, man. That is, but no, nice pop there. Good having an extra set of eyes. TT Mac is popping in here, Dennis, and this is kind of up your alley. A little Mark, perhaps a little market structure. SORL. This is a lower price stock here. Some stock printed down 70 cents out of range, but then it worked its way back. I don't know if they were odd lots or whatever, but did have that spike down. This was, I believe it was yesterday. That probably too low of a price of a stock for you to keep an eye on.
I don't follow this company. Okay. I've traded it before I know of the company, but I don't follow it at all. The story. Okay. Follow closely enough to give any commentary on it. No idea what trading action was from yesterday on that.
Okay. All right. What else do we have in ratings?
Yeah, we have a note here from Credit Suisse on the staples here this morning. They're initiating a bunch of stocks here, so I'll run through it. They are initiating Credit Suisse is Outperform for Constellation Brands, Monster Beverage, and Clorox, initiating Procter & Gamble and Coke at a neutral, and two stocks are getting the underperform treatment here this morning, Pepsi and Colgate-Palmolive. So we don't really care about the neutrals too much. The outperforms and the underperforms are interesting. The outperforms, again, STZ, Constellation Brands, Monster Beverage, and Clorox. The underperformers, Pepsi and Colgate.
Automatically think this will help Constellation Brands because it's been going down for a few days, and this has been a little bit of a wild child. We know ever since that CNBC Fast Money interview when the CEO or whoever it was and his brother said they bought 1 million shares, which we know wasn't exactly true because it was an option exercise. But anyways, the stock kind of took off after that. Been leaking a little bit since and slowly leaking. So now you get a vote of confidence from CS that can maybe buck that trend, and we are seeing that this morning. Up $2.50 on Constellation Brands. What do you think of this ST Zebra chart?
Let's see what happens at 170. All right, you're getting a pop off this, a little bit of volume trading. I want to see your 2-day high at 170. So, trading up on very, very light volume. So the longer it takes to get to 170, clear 170.22, your 2-day high. I look for a little bit of a fade here in Constellation Brands. And the SPOOs are starting to fade just a tad here.
Slightly.
Yeah, we got up to 76 and a quarter. 77 and a half is my first resistance level here. So I don't know. I think this could be a little bit of a gift rally here this morning on the dragster. And really got to see. The longer it takes to get the SPOOs up 27.80 here in that handle and hold, I think you might get a little bit of a fade, but still early here. We got 12 minutes before the show ends and 42 minutes before the open.
Two underperform ratings here, Pepsi and Colgate. And Pepsi is trading down 90 cents on this, and CL trading down about 38 cents on this. Usually when they go to underperform, it will influence it. These are consumer staple stocks, so don't expect 3-4% moves on ratings changes. Consumer staples are very conservative. So when you get a 1% move, it's a fairly large size move for a rating change. And this isn't a downgrade, it's just initiations. But at initiated at sell, there is some pressure on Pepsi and CL today.
A little bit, but we'll see what happens here. 4 lows here. Let's just call 115.50. You're currently trading 115.76. So we're buyers there the last 4 days. Let's see if they're deterred by this change in rating. If not, I'm expecting another buck drop to 114.31. That's pair of lows as well.
What about?
I just want to say ex-dividend here. We have a lot of stocks that are going ex-dividend here today, and it's always interesting when you have a big day. We have Kimberly-Clark, $1.03 dividend here. General Motors, 38-cent ex-dividend. So GM closes 38.67. Adjusted closes 38.29. So you just make sure your system picks these up because you don't want to get caught. We've got Waste Management, a 51-cent dividend. Kraft Heinz is ex-dividend here today for 40 cents. KHC, so the adjusted close on that is 32.46. Joel's getting paid for that 40 cents here this morning. Big one overseas, Rio Tinto, RIO, paid a $4 dividend overnight. 59.19 is the close. The adjusted close is 54.94.59. So 54.95, call it. So $4 dividend total for Rio.
Rio also
BHP Billiton and BBL. So those two companies are the same. They paid $1.10. Lots of ex dividends here overnight.
Rio also got a downgrade from SocGen. So sorry to tell you General this morning. Not that would overrule the dip, but
it's actually trading up. So we've seen some weird stuff here this morning. It's trading up from the adjusted close, but Toll Brothers got basically hit here on a downgrade to underweight from JPMorgan. It's trading up. So weird things happening in the market here this morning.
And how do you use that adjusted close in your trading strategies?
Just make sure, when you're doing anything, and obviously that you know what the real close is. So if you're trading KHC here this morning, you might be thinking, oh, KHC is having a weak open here. Well, it's not really. It's trading up actually 20 cents. But a lot of times you'll see stocks don't quite go down as much as the dividend is. So, dividend capture strategy is you buy the stock overnight and you sell it the next day. I did do that in Kraft Heinz. I did buy it overnight at 32.86 and I've already sold it. Sold 32.55, 32.60, just trying to scalp a quick dime off of it, 10, 15 cents. But that's usually a pretty good trade in Kraft Heinz if you can make 10, 15 cents on it as a day trade overnight. But dividend capture strategies, all kinds of different things. Like we always say, stocks strong ahead of the ex-dividend date week afterwards. Those work very well on AT&T and Verizon when the dividend is a big chunk of it. I'm not sure. Kraft Heinz has so many other stories here going on right now. Obviously, still digesting from its weak earnings report and trying to figure out what it wants to do. That it's hard to say that dividend's going to have that much influence on it.
I just want to mention Kraft Heinz here. We did talk about it earlier in the week with the Morgan Stanley upgrade. Man, oh man, maybe everyone's out that wants to get out because this thing, huge volume day on the big down day, and they continue to pound this thing. Low of the move is 31.82, currently trading it down 23 cents here, but the volume is really coming back down here. So what I'm thinking is like everyone that's tired of the stock and getting it out of their portfolio, you may just have a little, not so much a fundamental rally here, but just a seller's exhaustion kind of rally. And the big level I'll be looking at, as opposed to trying to pick this up on the downside here, and I did mention this on the day of the upgrade, keep an eye on 33.50. Well, 4 highs in a row flanking that area. So if, in fact, if you can ever get back over 33.50 here with some kind of volume burst here, I'm not looking for a rally here in Kraft Heinz, and I'm not buying anymore.
What about, we had a secondary offering cancellation this morning, which you don't see that too often. GrafTech, EAF, they announced an offering on March 4th, 17.5 million share offering. And this morning they said they are going to cancel that due to the market conditions.
I mean, secondary offerings are never good for a stock. So when you get them canceled, it's going to be good for it. So obviously the last couple of days, it probably was getting hit on that. It's bouncing back. I wouldn't expect it to get it all back, though, because it kind of tells you that this company doesn't know what the hell it's doing. Going to do a secondary. Now market conditions aren't allowing us to do a secondary. It means nobody wants your stock. That's never a good thing either. So it is lifting here because it's not going to be the dilution that a secondary would give it. But that also tells me that nobody wants your secondary. So that means nobody really wants your stock, and that means I don't want your stock.
Okay. S&P's falling apart.
Rolling over.
Here. Yeah, I know. Could they waited till the open there? Holy mackerel. Anyways, we're now down.
Did Drogster say something else?
No, it was just drug fluff. It was drug fluff on that. It was just missed the daily pivot there at 76.25. But we'll keep an eye on the SPUs here. Now it's going to be a chop day. I'm telling you, you got the rollover early, caught people off guards. contract switching between March and June, splitting the volume a little bit. You're going to have some nice vacuums today. For Abner's boy, I want to look at Glue Mobile, GLW. Dennis, are you still in that one?
No, I sold it. I wish I didn't. I love this stock, though. I think this is eventually over $10, so I like it. Zynga, too. I am in Zynga. I like that one, too. But isn't
Zynga have a deal or something on the table?
No, I don't think so. Is there a deal on Zynga?
I don't know.
I own it in my long-term portfolio. Maybe it didn't. I don't think so. They've had some, they've been working some stuff with Disney, but no deal for the stock or anything like that.
Yeah, okay.
But it's just the key gaming. I mean, these are, they're selling the games on. Well, they're not selling. They've got these games online, and I guess they're selling some of them. But they make all the money off of the in-game purchases and stuff. These things are just the esports is not going away. The gaming is not going away. They are the Glue Mobile and Zynga are the exact opposite of GameStop. They don't have physical stores. They're making the games. Games are popular. They're going to continue to make different games. I like both these stocks long term, Glue Mobile and Zynga.
I'll just from a shorter term perspective here, you got to clear out your seller here. You got a pair of highs at 941 and 944, but even if you get above that, boy, someone really wanted out of a piece at the 960 area. I'm looking at 4, 5, 6 highs here, so. Holding up near the highs of the move, looks like they brought their offers down a little bit, but I'd really like to see it clear out all that congestion there at the 960 area, and then perhaps we'll see $10. So little pause in the rally here for Glue Mobile. Let's take a look. I'm getting a couple stocks here, Dennis.
Yeah, let's
take a look at them. I think that this CVS. We're getting asked about it almost
every day.
Every day.
I said yesterday I don't like it. It's 55. It's 54. Eventually it's going to get a bounce. It's due for a bounce, but I still don't like them, long term. Some people might argue it, but I just think there's longer term issues here. Walgreens boots. I didn't say I didn't like it yesterday at 64. I still don't like it at 61, but they were getting oversold now. So you're coming here short in these things now. You're way late to the party. I think they are due for a bounce. They are going to get a bounce, maybe even today. Look for a turn, maybe, because it's been down too many days in a row. But it's hard to say. I mean, long term, is there some value here? Maybe. I just don't like the fact. I said this yesterday on the show when they were 64 and 65 or 55 respectively. That it's the same thing. Amazon. We know Amazon's kicking around. They're going to be selling, drugs. They're coming for them. Whether it's today, tomorrow, or next year, or 2 years from now, I think there's definitely pressure and competition coming for them there. So that's why I'm somewhat concerned long-term story here. But, is it oversold in the short term? Sure it is. It's a due for a bounce? Sure it is. So I don't know where that bounce is going to be. Will I play it for a bounce? Maybe if you start to see a candle form. But I'm just I'm out on these long-term. I don't want them.
Yeah, it's hard. We have, and this is not a record here because I know we've talked about a few other stocks. 11 down days in a row, Dennis.
For what?
For CVS.
Yeah, that's getting to be ridiculous. So you came from 70, and this was was it earnings on this?
Yeah. Yep.
So this is the opposite of the gap. Well, I guess it's a gap and go down. So it's been straight down ever since. I would say wait till it stops going down. I mean, if you're thinking, if you're a value guy and you're going to argue the other side of me and think there's long-term value here, why be the hero and try to say, okay, this is the time? Because you could have did that at 60, you could have did that at 59, 58, 57, 56, 55, 54. Wait till they stop going down. Give me a green candle. Give me something to lean on. Stocks continue going down every day. Trend is not your friend until you get a green candle in there. Is it going to have one here? Yeah, eventually. And then maybe you've got a stop-out point where you can say, okay, well, I'm not this low. But as it continues to make new lows, it's just tricky. The hardest trade in the market is to call a bottom on a stock going straight down, because who knows where the hell it is.
Monthly lows. Let's see, where are you getting to? I'm just going to give you, when you go this kind of perspective here, you got to look at the monthly lows. You hit 53.94. That was in April of 2013. Your low from yesterday, 54 even. So you kind of got a monthly low to lean on here, coinciding with the daily low. Let's see how we hold up today. You could get the old dipsy doodle where it takes at that low but comes back above it, and then you have a a stop out point on the reversal. And on the dailies here, let's see. I just want to look at the volume. Pretty steady volume. 43 mil traded on that big $5 down day. And it's kind of been coming down, back down to like its normal volume. Actually, it's still not. So I'm not sure everyone's out in this one. But, you got the 54. At least you have a monthly low that coincides with that one.
All right. 9 o'clock. That'll wrap it for today's show. Just PSA, I will be out tomorrow. So you have just the dulcet tones of Joel and Dennis to get you through the morning. But thanks for everyone who joined us today. Thanks to Mark Chaikin, who stopped by for a few minutes. On tomorrow's show, we will be joined finally by Rachel Shasha. She'll outline her children's place call and hopefully give us another good one on the short side or the long side, I suppose. Doesn't really matter. But she'll join tomorrow's show at 8:35. In the meantime, you can catch today's podcast on iTunes, SoundCloud, Stitcher, TuneIn, or Google Podcasts, or just rewatch our show on YouTube. Thanks to everyone once again. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. Hope you all have a good rest of your day. And since I won't see you tomorrow, have a good weekend. And I will see you on Monday. Joel and Dennis will be back with you tomorrow. Have a good one.